Peter Attard Montalto from Intellidex is our next guest, and he joins us now live. Peter, very good afternoon. Great to speak to you. You've obviously picked up on parts of this conversation, that growth in GDP by 1.2%. Your immediate reaction?
So it's a little bit more positive than expected. There was a very wide range of market expectations because of the uncertainty introduced by the rebasing. But overall, there seems to be a little more underlying momentum coming through, particularly, interestingly, in something like household consumption, in agriculture, which you've picked up in the conversation already. The transport numbers, I have to say, look a little odd. They have taken everyone by surprise. This would be the fastest and largest contribution to GDP ever from that category. So there's a little bit of skepticism there about exactly what is driving it. But the most interesting one is probably the personal services, which we were expecting a pretty strong print, but was stronger still than expected. And the big part of the rebasing actually has been the inclusion and the better mapping of the personal services sector, in particular, wrapping in more of a lens onto the sort of shadow or informal economy, which is now wrapped in more. And I think this shows that there is still a buzz of underlying economic activity through Q2 that was a little more in terms of momentum than initially expected.
Peter, when it comes to the rebasing, many people I've spoken to say that they are actually finding it hard to forecast what is going to be happening to the South African economy. Usually, many organizations give out forecasts. What's so difficult when it comes to making those forecasts about the rebasing that's just taken place from Stats SA?
Well, it's because we build our forecast from the bottom up. So we're talking about a huge amount of data that is changing, a huge number of components and models that have to be re-estimated. But in a sense, I don't really buy into all this sort of faff about rebasing. I mean, in terms of the crisis in the economy, in terms of unemployment, we know what the numbers are. You know, we know the wide definition unemployment in Q2 was well over 40%. In a sense, that's all that matters. We know what the tax data is. The fact that the economy is actually 11% bigger now after the rebasing actually makes the tax data sort of look even more sort of question in terms of what the medium run sustainability of the fiscus really is. So I think, you know, we need to lift our heads up slightly and think about, you know, the data that we do have a firmer handle on that points to things like the inequality crisis, the unemployment crisis, etc. And that stuff is not changing.
Peter, 11% bigger economy certainly makes it look like it is, growing or was bigger than what it was. But things have not materially changed. Are we wrong to say that we wanted, this is an attempt, or if I may say, to paint a rosier picture of how things actually are when it comes to South Africa's economic performance?
Well, no, I mean, I think the Stats SA is still entirely independent. They have a lot of problems in terms of their budgets and various other things, but I think the independence of Stats SA is not really at issue here. And, you know, this is a normal process. All countries go through rebasings, including developed markets as well. It just happens as in emerging markets, they're normally more dramatic because you're taking into account new data that gives you insights, in particular, into the shadow or in informal sectors. This is why you get these large increases. Now, you can spin the rebasing any way you like. So, for instance, one can argue that taxes should be higher because currently, tax as a percentage of GDP now has fallen because of the rebasing. Or you can argue it the other way around, that actually, you know, the economy is already overtaxed and we're struggling to get tax in with that lower tax GDP. So you can argue this any which way you like ultimately through the rebasing, and each side of various debates will do so. But no, I mean, I think this is useful. We now, I think, are more confident that we understand more of the economy after, and is captured in the data after this GDP rebase.
Household expenditure is up 0.5%. How much of that can we attribute to that 350 Rand grant that was introduced by the government to cushion the blow of the COVID-19 pandemic on household incomes, particularly on low-income households?
So that's what we're going to be delving into the data. If we look at the data just at a high level, we can see that food is particularly strong. transport as well, and things that basically are a larger part of the basket of lower income households, whereas something like furnishings, durable goods are actually pretty flat on the quarter and somewhat weaker. So there does seem to be some support from government interventions, as you say. But we should also offset that. I think we might forget what happened in the budget in February. Remember, underlying grants didn't increase by inflation totally. So there is a lot going on beneath the surface here, but there is some signs of support certainly here. We'll have to dig more into the data.
Maybe another surprising piece of data there is exports, which were up 4%. Looking at how, we have done over the past couple of weeks when it comes to, Transnet being hacked, and also that, unrest that we saw. Exports are up 4%. Imports are actually also up 0.4%. Are we expecting that the third quarter could be affected a lot by the unrest we saw in July?
So this is the key uncertainty going forward. We did, as you say, see a pretty good positive net trade surplus in real terms for the economy in Q2. Now, you can argue that both ways. I think the rebound in exports was kind of expected in real exports. It was actually the flatlining of imports, which shows that there's still some underlying uncertainty in the economy, that domestic demand is recovering a little slower. But we've already seen from the high-frequency data coming out to start with for Q3 that there has been a bigger drop-off than expected initially in the trade data that was out last week for exports. So we are mulling, obviously, the GDP impact. Now, there's been a big debate about how much you have to shave off of full-year GDP because of the unrest. The SARB's come out and said 0.4. I've said 0.7. Consensus is somewhere in between the two of us. Treasury's on the upper end of those. That sort of level. But we actually get more data coming out this week, manufacturing at the end of the week, where we'll be able to make a stronger call on the impact that has been had from the unrest. Currently, the figures still out there, are the ones that we had really from right at the beginning, which is about 50 billion loss to output from the unrest. Of course, you have to offset that then with the speed of rebuilding, and that's what seems to be a little slow. We're waiting for insurance payouts, etc. But if those start coming through now in the months ahead, the restarting of the grant as well, we can see a stronger recovery, say in Q4, but still a pretty weak Q3 expected.
Peter, Attard Montalto, thank you for your time this afternoon. And GDP numbers a little more positive than expected, he says.